Hey guys, Mike here. So obviously another big red day in the market, and it was really a big trap this morning where people got suckered in, and then boom, they dropped the hammer, right? Banks reported earnings, and some of them were good, some of them were bad. It was all mixed or whatever, but the market was just moving up over 1%, and then within 30 minutes, turned on a dime, headed straight down, probably about 45 minutes actually into it. And so in this market, can't be greedy, got to secure profits. I know I did that on a couple of things this morning, right at like 9:45, because I was heading out. Got to take my son camping, so had things to do, and I couldn't manage any positions. So I was like, you know what? I'm not gonna be greedy. Let me just close out what's green, and kind of happy I did that because those were just some swing trades. But the answer, I had people in the comments saying, what happened yesterday with the rally and all this other stuff. I'm going to go over that. And then we're going to go over why the market turned so fast, because it had something to do with a warning from the banks, and we kind of see this coming, and it shouldn't be a shock or anything. And then I'm going to show you something that for the housing market, I don't know, you tell me what you think. I'll get your opinion on what you think happening, because I kind of seen a repeat going on here. But yesterday was straight up technical, right? And I told the members this morning during their morning briefing that right at the 3,500 mark, boom, algos kicked in. That happens to coincide with the 50 Fibonacci retracement level. If you go from the bottom of the 2020 up to the 2021 high right there, and you can see right there, just kick right on in at 3,500, and we zoom in. The other thing you got to look at in rejection, which happened today, also is there's a trend line you can draw from the top to the bottom there it hit, but also the 20-day moving average is rejected multiple times off of this. As you can see, 1, 2, 3, and this will be 4. And so that shouldn't be too much of a surprise right there. And so we've got to really see if we can bust through that, because you can draw a trend line from the top to the bottom, and it's just bouncing right off of it every time as well. They're kind of coinciding there. But of course today, obviously, you had this big turn. It was really a sell-off almost across the board, except in certain sectors. Oil took a turn for the worst. Transports, you go on the list, all the Cathy Wood stocks absolutely got destroyed, which is nothing new there. I believe that's at a new 52-week low. I believe the banks were mixed, but they went from green to red on a lot of them. Your travel stocks, some of them were actually up. Cruise lines, I think, have been up like 3 days in a row or something. I don't understand that one, but maybe they're just so oversold, really. And then, of course, you got your precious metals, you got your cryptos, you got your Chinese stocks, your fintech stocks, your semiconductor stocks. Somehow shop is green on the day. Not sure how that happened. Then you got your big boys. They took a U-turn from yesterday, selling off. Tesla selling off big time. And, of course, that took down, obviously, all the indexes between 1 to 2.5%. As I'm recording this, it might in the last hour and a half, because I got to record this early, end up rallying. But the big thing was UBS come out today, and of course with other banks like Moody's and Citibank, and they're warning of more U.S. credit defaults, and they're ramping up holding money for this because they're expecting it, and so do I. I think everybody expects it. And you can see right now, big pile of trouble, distressed debt pool, and the American growth is the largest since 2020. And right there is where we're at right there. And you can just draw the line straight over. That's 2020. But, is anybody really surprised? You keep raising rates. Of course, there's going to be more defaults. You can almost guarantee it, right? It's just the way it's going to be. That's what happens. This is what people keep talking about with the Fed breaking stuff, and they keep raising rates and rolling off the balance sheet. This is to be expected. It's to be expected if we hit really rough economic times for people out there defaulting on credit cards and everything else. If they're starting to lose their jobs, that's what's going to happen, right? And so right now it's happening at the business level. And, the other two things, no surprise at all, that are really spinning this market down is the dollar is just so freaking strong, right? Boy, what a trade. Whoever got in, I don't know, at the beginning of the year, is looking good for you. They ain't been down that trend line in quite a while. And, of course, it's continued to wreak havoc on other countries and their currencies. And then you just look at the 10-year yield. When this goes up, stocks usually will come down, especially when it's the dollar and the yields in unison. And it was green as well. And it's just been in this channel just moving up. It's over 4%, which freaks people out. And please hit that like, subscribe button, and share the video if you get anything out of this, guys. I really appreciate it. And so, of course, we'll have more earnings next week. Sunday, I'll definitely load you up with what economic news is coming out, what earnings to be looking for now that we got banks behind us. Again, it was all mixed. The investment part of it is a disaster for all of them, it seems. But they're making a lot of interest on all the cash they got, that's for sure. They got a lot of cash. And, that leads me into some news that come out which you should be aware of and actually care about. And then the other one I was going to ask you real quick was this right here. I talked about, for members who've been around long enough, XHB, right? This is the home builders ETF I like to track. And it kind of told you that the housing market crash is going to happen in '08, right? If you looked at it. And I'm looking at what's happening now. And so left is 2007 and 8. The right's what's happening now. And to me, they look so freaking similar. I mean, when you look at this, here's this big move up, and then you get the big drop, breaks below the support level, which we didn't know at the time. And then there's a big move up, and here's the drop, and it breaks through that support level, as you can see. And then this one comes back up, and it basically gets rejected right there. This one comes up, gets rejected. And then this one breaks through, comes the build back up. Now this one breaks through, heading back down, broke down through again, which I assume is about right there maybe. So we're either going to see, if we see another move up, or are we at that point where it's the big break? Because when that happens, as you can see on the left-hand side right there, once it broke that last time, you get the major fall of, I think this ETF went down, 58%? And that was before the official recession actually hit. After that, it just completely went off the rails. And so I just saw that there when I was looking at the chart, and I thought, wow, that's eerily similar, right? I mean, almost identical, depending on where we're at. But obviously, as long as prices are high and these rates keep going up, the mortgage rate just hits almost 7%, and we'll hit 8 by the end of the year for sure. Who in the world is buying into that mess? And who knows where they're going to go? I don't know. But and then if we do officially hit a recession, all of a sudden the Fed gets their way and unemployment starts to rise. That's many less people actually either buying homes or losing their homes, one of the two. And so, I just wanted to bring that attention, get your opinion down in the comments, see what you think on that. The other one was, which I found, interesting to say the least, is, and there's two more. And this one right here, I told members Tuesday in the morning briefing, I said, here we go right here. U.S. Treasury asked major banks if it should buy back U.S. government bonds. And Janet Yellen had said something about this the other day, so I told the members that this is the one you need to watch out for. I was like, okay, if you're asking the banks that, what do you think? Right? Because there's been this liquidity issue building, and it's not that big a deal right now, but I guess a lot of people are projecting to be bigger, obviously. As you see, yields, rates, everything going to the moon, they start rolling off their balance sheet. And like I said, somebody's got to step in, start buying all these bonds, right? And right now you got more sellers than buyers. So that's when you have a liquidity crunch, and that's what will make the Fed pivot quicker than anything else, because they ain't letting nothing go down. And so we'll see what happens on that one. And the last one I was going to go over was this right here. At first I thought this was stupid, and then I looked into it. I said, well, I understand what they're doing. It said Biden unveils plan to pay farmers and cities for Colorado River water cuts. And basically what they're going to do is pay like $4 billion, call it the $4 billion drought mitigation fund because of all the droughts there, and pay them not to grow crops and not to take money from the river. I don't know how they're going to track all this. That makes no sense. But why you should carry it, and the reason why they're doing it is because of California. Because California takes a lot of money from the Colorado River for farming. And it's number one on this little circuit here, okay? It even beats California. And when you look, the reason why it's a big deal is because California produces over 13% of the nation's agricultural production. And on top of that, over a third of the country's vegetables and 3/4 of the country's fruits and nuts are grown in California. Again, I don't care what your politics are. I don't care if it's a red or blue state. I'm just saying you got to have California, 5th largest economy, I still believe, in the world, if I'm not mistaken. And yes, we get a lot of stuff from there, so you got to have them, right? And they need a lot of water to do all that farming. And of course, the droughts, if you hadn't seen all the pictures from these rivers out there, it's insane. I mean, they're finding boats they hadn't seen in years upon years, finding bodies, all kinds of stuff out there. The drought has got so bad. And so, I got to ask, I'm not an engineer, but I've always been curious about this. Like, I don't get it. How come we can build oil pipelines and we can't build a water pipeline? Because where I'm at, we got too much water, right? I mean, it rains all the freaking time. You think you live in Seattle, Washington or something. Like, why can't they build one to come down Seattle? Why can't they build one to go from east to west coast and give them our excess water? That would be fantastic. Again, I'm not an engineer. I don't even know if it's possible, all right? I assume it has to do with money, right? Because that pipeline that the states are passed through ain't getting no money. And, of course, it would cause that. I know people say, it's so expensive. Well, it's so expensive because everybody's putting their hand in the cookie jar all the corruption. That's why it's expensive. But again, I always say if we can spend money overseas to build infrastructure, well, how come we can't ship our excess fresh water from all the rain and everything else over there? Again, I'm not an engineer, don't know how to do it, don't even know if it's possible to do it. But we used to be the country that, was pretty innovative. But now everybody's passing us by with bullet trains and everything else. I mean, we still got the freaking Amtrak for crying out loud. We still got Greyhound bus lines. I mean, you got all these other countries that are building bullet trains and all kinds of crazy stuff, but we can't get any of that stuff done. We couldn't even get one here in Florida to go from North Florida to Orlando to cut down traffic because the counties couldn't agree to it, right? It's all about who's getting the money, who's getting this. And so I don't know. But if these droughts keep getting worse, it's going to hit somebody's pocketbooks, right? And I guess it just ain't hit the right people's pocketbooks yet. And so if you wonder, and the more crops that we don't either die out there or whatever it is, the less supply there is, more prices go up. What'd you see just go up again? Fruits and vegetables, if you watched my video yesterday. If you didn't, I'll put it at the end when it comes to what went up when it comes to inflation. And so, we got to have it, but I'm just curious. Put down in the comments, your engineer, why that can't be done. I don't know. I don't get it. Of course, look, I used to live in Atlanta, and we had this one exit that came off in the perimeter location. And I mean, it was the worst traffic you've ever seen. I mean, just you'd be sitting on that bridge for, overpass, for like an hour and a half trying to get off of it. They did finally? Amazingly. They went to France. They figured out what they do for traffic, and I think they call it a diamond or something they came up with. So we had to take stuff from France, and finally put a diamond in there, they call it. I believe that's what it is called. Next thing you know, traffic's flowing smooth. After all those years, we couldn't even come up with something of our own. We had to go to another country, and they even beat us in cutting down congestion now in traffic. Isn't that crazy? I mean, I don't know what happened to us, but, I guess politicians, corruption is what happened. I don't know. But anyway, hope you guys have a good weekend. I'll see you Sunday. I'll be in the woods, so I will not be answering anything on my phone or anything like that. But wish me luck. I'll see you Sunday, okay?